Welcome to the Roy Morgan Weekly Update for mid-January. Lower inflation is good news for Labor. The ALP vote's up, inflation's down, Australians' inflation expectations are down, government confidence is up, mortgage stress is down, and employment's up. That means unemployment is down. So pretty much good news. The second Roy Morgan survey of the year shows support for the government bouncing back strongly on the back of lower than expected official inflation figures. Support for the Labor government increased 2.5% to 51.5%, now clearly ahead of the coalition on 48.5% on a two-party preferred basis. The ALP vote increased in every state. This is still a close result, and if an election were held today, it would result in a hung parliament, with the balance of power held by independents and minor parties. So the context for this turnaround. Well, the latest ABS inflation figures, or CPI, was 4.3%. That's down 0.6%, and it's the lowest for 2 years. This inflation result means further interest rate rises are now unlikely, a clear positive for the Albanese government. The other news of the week that fell flat was opposition leader Peter Dutton's call to boycott Woolworths, Australia's most trusted brand for 2023, after the supermarket giant decided not to stock extensive Australia Day merchandise. Now, Dutton's call failed to resonate with Australians, as support for the coalition fell on both primary and two-party preferred terms. Roy Morgan government confidence, that's whether people think the country's going in the right direction or the wrong direction, improved this week, up 1 point to 81.5. That's the highest since early November. But still, a majority of Australians, 53%, say the country's heading in the wrong direction, and only 34.5% say the country's heading in the right direction. ANZ Roy Morgan consumer confidence was virtually unchanged this week at 84.4. Inflation expectations were down slightly by 0.2 points to 5%. And inflation expectations are now clearly above the official figure of 4.3% for the year to November 2023. Now, remember when inflation was on the increase, Australians' inflation expectations, what we thought inflation would be, seemed to be a lead indicator. Today, it seems Australians' concerns and lived experience of cost of living pressures are still strong, and they don't yet feel we're over the worst of it. Now, mortgage stress. Roy Morgan's the only company that measures mortgage stress every month, and the latest mortgage stress figures show a second straight monthly easing in mortgage stress. By the end of November, 29.9% of all mortgage holders were at risk of mortgage stress. That's an estimated 1,490,000 mortgage holders. Mortgage stress, as I said, has now eased for 2 straight months. Also, 19.3% of mortgage holders were considered to be extremely at risk. So that's a smaller proportion that are really extremely at risk, equivalent to 934,000 mortgage holders, and that figure is now down for 3 straight months. This reduction in mortgage stress in November came despite the Reserve Bank raising official interest rates in early November to a 12-year high of 4.35%. So the easing of mortgage stress continues a trend seen in October and is a combination of several factors: increased household incomes, increased employment, reduced amounts borrowed, and reduced amounts outstanding. So, to some extent, while banks are less likely to lend to those who might be stretched, people also seem to be doing everything to reduce their mortgage, downsizing, selling other assets, and whatever else they can think of. When home loan interest rates were really low, people used their home loans to fund what we might call the business of life: small businesses, holidays, home improvements, school fees, second and holiday homes, etc. Home loans were a cheap form of financing. The increase in interest rates has encouraged people to think again about this kind of funding, and they're making really different choices. Finally this week, to Australian employment markets. There's positive news for the labour force, with well over 14.1 million Australians employed in December, a record. And real unemployment decreased to 8.8%. That's down almost 1%, down 0.9%. However, underemployment, that's part-time workers wanting more hours, that jumped to 10.6% in December. That's the highest rate of underemployment for over 6 years, since June 2017. The overall figures show total unemployment and underemployment, what we might call the workforce underutilisation, was 19.4% of the workforce in December, over 3 million people for a third straight month. Now, as we've said throughout last year, these monthly movements occur within a broader context of a surging population and a surging workforce. So Australia's population, aged 14 and over, that's largely the working age population, has increased by a record 831,000 compared to just a year ago, to well over 22.2 million. And our workforce is now well over 15.5 million. More Australians are employed, now 14.175 million Australians are employed. That's 607,000 more than a year ago, 471,000 more in full-time and 136,000 more in part-time employment. Fewer Australians are unemployed. Unemployment's down slightly from a year ago by 20,000 to 1.364 million. However, there's been a substantial increase in the number of unemployed, which is up 290,000 to 1.65 million. So overall, this massive figure of over 3 million Australians who are unemployed or underemployed, or 19.4% of the workforce in December, is one of the most important problems facing the federal government this year. Thanks for listening today, and I'll be back next week to bring you the most up-to-date readings on consumer confidence, inflation expectations, voting intentions, as well as the results from the special Roy Morgan survey looking at views about Australia Day. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening.